Welcome to the Hedgineer Podcast with your host, Michael Watson.
Hedgineer.
Hey everyone, and welcome back to another episode of the Hedgineer Podcast. I'm your host, Michael Watson, where we talk about technology, data, and AI in the asset management, hedge fund, and proprietary trading space. Just like the last couple episodes, we have another amazing rockstar guest this week with Christina Qi, the founder of Databento. And if you're not familiar with Databento, we're definitely going to plug you in. But one of the things that I'm just going to give a quick shout out for that I think is really cool, it really disrupts the data experience of consuming real-time market data within the asset management and hedge fund space. Because in my experience historically, like you would go to Bloomberg for real-time market data. It's incredibly expensive. And it's just the data experience, the UX of connecting to their APIs. The process of onboarding is almost a three-person job. You need a data negotiator for licensing. You need an engineer that can figure out how they can connect to the various different sources. And then you need an operations person to manage those two other people. And Databento does like an awesome job. This is not a plug. She's not sponsoring this, but does an awesome job of kind of like disintermediate that. So Christina, super excited to have you on the show. Hopefully I didn't butcher the Databento intro either.
No, you did a great job. Thank you. It's great to be here.
Yeah, for sure. So like with that, you want to kind of like walk through how you decided to go after the pricing real-time market data space for like a company perspective? Like you want to build out your own startup that actually solves a problem like that. How did you come up with it, and kind of walk us through the journey?
Yeah, absolutely. So I always answer everything 100% as honestly as possible. And my answer is going to be a little bit longer than people expect, which is that I actually had ran a hedge fund for almost a decade, and our fund had the worst performance it's ever had in 2020. It was down like 12% in 2020. And I think during that time, just pandemic happened and everything. And everyone on the team, we were kind of like thinking, okay, is this the time to, move on from this and do something else? And the funny part was that one of the reasons why we did so poorly was actually because of the data. So we were always, my teammates were always blaming the data. We were always blaming the data was always down. The quality was always terrible. The price, we were paying more for data sometimes than for employees. Like there was something just wrong with just the way that we were, managing our data, as well as, just all these vendors, and none of them really quite could fit our use case, by the way. And the use case being like, we're trying to build these machine learning algos right on top of the data. And I think by then, like, ML, like AI stuff was becoming a lot more popular. But it was crazy to see like there wasn't a data vendor that was API, that was like an API product first and foremost. Everything was kind of, an offshoot of the terminal that they would offer. So everyone kind of had this terminal product, which is great. There will always be a place for that. But then what about, companies like us that didn't want a terminal? We wanted, we can't just be, calculating, I don't know, technical indicators and stuff like that, for us in order to survive as a brand new hedge fund, right? Like we had to, in order to grow and innovate, we had to do more than that. We wanted to take data and do more like machine learning or, other types of things on top of that data, basically. And that data needed to be fed to us, in real time by API in, hopefully as good of quality as possible. And so that was our struggle, was that we couldn't get that data, and there wasn't really a vendor that could offer that to us easily. Let's say if we want to level 3 order book data via internet. By the way, Databento, I believe, is the only provider of that today, of that kind of data over internet, without having to set up, like pay an arm and a leg and hire a bunch of systems engineers and, set up co-location and cross connects and all that kind of stuff in the middle. And so we're grateful for, being able to actually provide that today. But that was kind of the origin of, we were thinking about, okay, that's a huge problem we had faced. And, can we still stay in this industry and do something like that, and, hopefully do something good for the space? And by then I was like, burnt out from trading and burnt out from kind of doing, being on that end of, and let's go on the other side, which I know is a step backwards in many people's eyes. I get it. I get messages every day, by the way, from people who had known me from my hedge fund days, telling me like, why would you do this to yourself? Like, why would you take a step back? And it's like, I'm fine. I'm living, I get to work remote as one of the benefits. So there's definitely pros and cons to it. And I'm happy to, always talk honestly about, some days I miss it. I miss the hedge fund life. And then, other days I'm like, okay, I'm grateful to like be, on this side where we can build a product and see customers, be happy about that. And, hopefully make a dent in the industry in the future. Yeah.
Yeah, for sure. I mean, it's interesting when you say the retrospective on the career path switch, where you go from a risk taker on the buy side to being a service provider, vendor, almost more on the sell side, and seeing that as a step backwards. I actually like from going from the buy side to creating my own startup is that I actually see it as part of just like a disintermediation of the value chain of the monetization process of running an asset manager in a hedge fund,
Right.
where there is like the tip of the spear, the risk taker that's ultimately making a decision that gets the P&L attribution.
Mhm.
But there's a whole set of systems and infrastructure and processes that ultimately play into that performance attribution of what the end of the day P&L was. And it's oftentimes really difficult to break up how you want to attribute data to infrastructure to systems to like even just the analysts underneath the PM. And if the idea came from the analyst, but the PM's the one ultimately responsible for sizing, how do you want to attribute value between those two? And so that on the surface, it seems like, oh, if you're not the PM, everyone else is a service provider. But there's also this element, once you see the entire system play out, that it's actually an entire supply chain. And if you can find an effective way to demonstrate value as being part of that supply chain as a vendor or a service provider or an algorithm, you can possibly like get a better value attribution by selling that product or selling that service to the fund. And then they just have to recognize it almost as a cogs of doing business.
Yep,
Um,
absolutely. I was gonna say the benefit of running, a vendor, right, is that one is that it's scalable in a way that one day you could have an exit opportunity down the road because you're building IP versus at a trading firm like my previous firm. We had even though we were building our technology from scratch, and we had some IP that we were able to sell off in the end, but there wasn't really the IP that you would expect. It's not like billions of dollars worth of IP that we could easily sell off to anybody out there that would want it. You had to be very specific types of firms that may or may not even, they might have their own version of it either, which most of them do. So you're absolutely right. There's that. And then there's also the pressure of the front office, for better or worse, when you work in a traditional financial firm as as a trader or as a developer within a firm, right? There's like a pressure of like almost every developer we hired at my previous company wanted to become a trader one day. They wanted to become a quant researcher, basically. They wanted to be in the front office, right? And so, whereas here, when you work at a data vendor like Databento, it's like I've never had someone come to me and say, "Hey, I don't want to be a salesperson. I don't want to be a marketer anymore. I want to be an engineer." Or an engineer saying, "No, I don't want to do that," because there's no sexy like department that's like more sexy than the other, if that makes any sense, at a data vendor. And so there's pros and cons, I guess, to that. There's dynamics, right? Of for us, like thankfully, we're not at the mercy of the markets, for better or worse. But then it's like on a good year, when I was trading at the hedge fund, I was like, we were on cloud nine. On a bad year, it's like, oh my gosh, like, we feel like, there's so much pressure on performance and P&L that we had faced, during those times. And so, yeah, it's just definitely interesting dynamic of the different day to day lifestyle. And I'm sure, you've experienced that too, Aaron, of like, doing, like having the different types of lifestyles and everything as well. Yeah.
Totally. I mean, well, one thing's kind of interesting on that is that like when I've like the best engineers that I've worked with, not always, but the ones that just really get the business, they can see around corners. They always have at least an intrinsic interest in
Mhm.
what is the investment process? How are you actually making money? How is this data or this product actually used as part of a portfolio construction system or a risk management system or a trading system? And I do sometimes get concerned when there's like a developer on our team or when I've worked within a single fund that isn't interested in that they sometimes start focusing on the wrong things. Um, and they can get distracted, but at least having that intrinsic interest of I want to better understand how this is actually being used as part of an investment strategy or trading strategy is always a good signal that's maybe a second order almost navigator or path charter to make sure they never get too far off track.
Yeah.
But then there's always the issue, like they want to go onto a desk. Like, oh, I actually want to become a quant or I want to become an investment professional. At least in my experience, you have to be very special. Like that's not an easy path. You can't just be a really good engineer and then inherently be a great trader or quant. Especially without a long tenured pedagogical process or a mentor or somebody sitting really closely with you alongside that. So there's oftentimes like not a limit, but it's difficult for any engineer or somebody that's really strong technically to just assume that translates really well to a completely other job that has different skill sets and different types of pedagogical requirements that you go through a learning journey to be able to become excellent in that field. So it's difficult when you tell somebody like, no, you can't necessarily become a trader, you can't become a quant, not just because you don't have, I guess, the capabilities, but you just haven't had that career pathing and the journey and all of the process and time and effort that it takes to become somebody that has like a mastery of a new skill, unless you really want to go to that 10-year-long journey. But I want you to get as much exposure to it as you can. And figuring out that balance just from like a career and mentoring perspective of other technology engineers is tricky to get right.
Oh, yeah, and plus most of those firms are so siloed that, you can't just, even across different teams, you don't even know what the other team is, yeah? And so, how are you gonna know what a quant is doing, on a day-to-day basis and what that's like? And you have to, pick up on a lot of you're right, a lot of things that aren't taught in a classroom or they're just learned on the spot on the job. Like market microstructure, I think is a really big one for our team that we all just we had to learn on the job essentially. And you don't really get a lot of time to do that. And, you have to you're right, it's like a 10-year cycle of, mentorship and learning and everything to kind of get familiar with all of those little details. Absolutely.
I see my feed in Twitter. I'm not a big Twitter person. I'm more of like a lurker, getting more and more diluted. But a lot of the topics that I'm getting more interested in, the conversations on Reddit are actually getting better and better as like specific niche subreddits are getting more traction, especially on the AI side. So that right now, like I actually get the most amount of technical alpha from Reddit than I do relative to Twitter or anything else. I don't know if you see the same thing.
Yeah, I think it's nice that Reddit is user upvoted, so it's not just an algorithm telling you which content you think you'll like, but rather it's like users saying, "Okay, these topics are great." And, usually the genuine quality content gets upvoted to the top, and Reddit hates advertisements, right? So, it's funny because whenever random people post about Databento, and then they'll just get those posts will just get deleted, by the way, because they'll get deleted thinking because they think that the person posting is me. And it's like, I'm not that dumb. I'm dumb, but I'm not that dumb. So, like, I would not go on there masquerading as other people and pretending like, I would not do that. But it's just funny how that's how that's a good thing, by the way, that Reddit is very anti-advertisement. Even though like every other post on there is secretly an ad in some way, but like at the same time, I'm glad that there's that sentiment that's around. I think that's a good thing. That where versus like Twitter, it's like there's just everything's even more ads, right? Everything's just very blatant and it's hard to know like you separate the genuine content from the not genuine content. So yeah, I appreciate that about Reddit a lot. And I've been on Reddit since I don't remember when was it 09 or 11? I don't know. So I celebrated like my 14th cake day or whatever it is. I've been around for a while. People don't even believe that it's me. And they're like, she hangs out on Discord and Reddit. Like I've been on the Gen Z communities, I guess, a lot more than I should. But yeah, it's been really fun to, be a part of a lot of those various communities. Yeah.
So are you a mod on any subreddit?
No, actually. I started like a Databento subreddit, but like it's empty. Like there's, we don't really, it's just dead. And we don't plan on like, putting effort into reviving that at all. And so usually we're like, if people have questions about us or whatever, like, we have a chat thing on our website, just chat with us, or we have a Slack community for better or worse. I know Slack is a little bit more boomer, I guess, the better way to put it, professional, than the Discord, but that's kind of where we've stuck to so far, and it's been all right. So yeah.
Yeah. I started with the podcast originally before, well, my non-compete was just kind of finishing for Hedgineer. And so I just loved talking about like this stuff in general. But it was fun to put that out more for like, I don't know, just like share it with the world. And we created actually a Slack community subreddit or a Slack community and opened it up to the public. It actually is pretty effective. But then once we started like building and growing the team, we started using Slack internally and we're like, okay, like we have a lot of focus on InfoSec policies. And so we kind of had to turn that off. But I do love the community aspect of like a lot of the space that we're in. And I think that right now, one of the best communities is the quant subreddit, but I feel the same thing that there's, it's a lot of dilution and not a lot of kind of like mentorship, pedagogical stuff, deep conversations. I have like some good alpha threads that I'll have within Telegram with people in the space, but I think there's definitely an opportunity for a little bit more community-driven technical discussions on asset management and hedge funds outside of just like FinTwit, outside of quant subreddit. Maybe we can ideate on that and come up with something after the podcast.
Yeah, I agree. I think that there's a lot of improvement that could be made with those subreddits, and but it's also just nice that their communities exist. And I will say, by the way, one of those subreddits is owned by not owned, but like one of the mods is like a data provider. Not from us, by the way, but just FYI that there is a little bit of some stuff going on behind the scenes, but that's kind of you gotta have to expect that from every subreddit by now. Yeah, a lot of the travel subreddits as well, by the way, are owned by the travel. The mods are all like travel agencies or travel companies, and we noticed that over time, and it's kind of hilarious to notice that and realize like, oh wow, there's people like that out there, but that's okay. I think they have an incentive to moderate, and kudos to them for getting on that trend faster than everyone else. Yeah.
Totally. I mean, it's like we in like 2021, like we would spend a lot of time scraping like WSB and then other subreddits really quickly because like the role of retail, just the percentage of volume that they would make up in overall flow for certain names suddenly it increased by orders of magnitude relative to retail flow before. And when there was only a limited amount of institutional volume to begin with, like retail suddenly represented like a significant portion of volume in a lot of names. And so understanding what the drivers from that were, like I never thought about, we never took scraping Reddit or looking at Reddit as anything seriously, but it became very influential in 2021. And I think that's indicative of like the role of Reddit has and the power of being able to influence that message. Like there was a reason why Roaring Kitties ended up having to go and talk in front of Congress, because like you can be very influential within the Reddit space. They can affect financial markets like significantly enough that it's going to bring some very powerful people to sit next to a Reddit mod, or now he wasn't a mod, but like a Reddit influencer. And like that's just on one subreddit. There's probably, I haven't thought about it, like a significant amount of influence that's wielded kind of behind the scenes on a lot of these subreddits by people who has self-interest, self-motivated interest,
Hmm.
for certain reasons, which I don't think is inherently bad, right? Like everyone has their own self-interest, and expect people to be a mod on a subreddit, just out of the graciousness. The heart, I think, is a little bit selfish of you to expect that of other people. But it is interesting, especially in our space, as like the role of short sellers, or like I forget the name of that fund that came out. They do a lot of like unique journalism. One of the guys I used to work with is over there where they'll actually push out reports, and then they'll take a position prior to that, similar to like an Ackman investor role. But doing that kind of at a micro scale, almost on subreddit, would make sense. So I don't
Yeah.
know. I'm assuming it's happening. I don't know where it's happening, but it's definitely an open canvas to be able to kind of influence the zeitgeist.
Yeah, I was gonna say since 2021, we've actually noticed an increase in almost like prosumer type data consumers, meaning like they're not the 17-year-old Robinhood trader, but at the same time, there's like a group of people that's in between, right? That's coming up, and they're not like institutional, like either in terms of they're not working at a large institution. It's just like right in between where, and that's been interesting because there really hasn't been a lot of service provide, not just data, but services in general that help cater to that, right? It's either your retail or your institutional, and the gap between that, is widening. By the way, it's unfortunate to see that, but it is true that there's just a huge gap between what a retail user gets access to in terms of everything, whether that's data or services, whatever else, latencies, like stuff like that, right? And brokerage stuff like that, versus like an institution, and kind of what the privileges that they get is absolutely insane. But then again, the institutions are willing to pay a lot more for that, by the way, like orders and orders of magnitude more for data, for their brokers, for everything, and that's why they're able to get the privileges that they do have. But yeah, so it's interesting to see. But there's a group of people that's like emerging in between, and it'd be interesting to hopefully support their growth as well, and see what happens in the future. But yeah, there's like lots of folks like that, or people who are starting trading on their own, and they're like, hey, we want better access to, we want granular order book data. We want real time stuff, not just like Yahoo Finance stuff. Right, like the people who are actually looking for more than that, we're noticing that too, or startups as well. Like a lot more startups that have formed around, pretty much since the pandemic in this industry, that are saying, "Hey, right, let's," like your friend you mentioned. Let's try to find different ways of making it easier for whether it's easier for people to trade or helping other hedge funds get launched faster or, other things like that too. I think those are all amazing and definitely hoping to, see more innovation in a space that's actually traditionally very difficult to innovate in, I feel like. Very, very difficult to penetrate. And I don't know about Hedgineer, but for us, like, one of the stereotypes is like, oh, if you're a data startup, okay, you are a retail product. But that's actually very not true for us at all. I mean, yes, we have anyone's welcome to sign up for an account. We are technically you can self-service us. We do have users who are paying us like $100,000 and they won't speak to us. Like we've never spoken to them before. And so our product is you can just go on our website and just get everything by yourself, which is amazing. But all that being said is that there's still like a stereotype, even though the bulk of our revenue comes from institutions, there's a stereotype that all startups face. I think thanks to, like the Robinhood GME kind of thing that if you're like a smaller firm, even though Robinhood's huge, right? They've already IPO'd and everything. But despite that, it's like that stereotype that, all the startups are retail products. When in reality, actually, we rival the largest institutions. And, the people who switch to us usually come from those, institutional, like traditional competitor, actually, versus a retail product. So, yeah, it's interesting to see that dynamic for sure.
Totally. Like, and I'm curious on where you see disruption happening within the alt space. So not alt data, but alternative asset managers, where there has been a legacy set of, I guess, stereotypical type of alternative asset manager. Like there's obviously the large institutional multi-strats. There are a lot of like single managers that are both quantitative or discretionary, a lot of long onlys, but they tend to come from very traditional backgrounds. Whereas a lot of people that are coming from trading their own PA, they don't use the term PA. They're like, yeah, I have like a Robinhood account. I don't call it PA. I'm just like, I'm a trader. And then they start getting more sophisticated over time and they start developing more sophisticated tools. They might actually then want to say like, hey, like, could I manage this for somebody else? Then they have to go through the process of thinking about how do they set up, and like, how do they set up a fund that they could have commingled product? Do they do that via an SMA? Oh, wait, now I want to get real-time data. It was just getting end-of-day quotes. Like, so I want to go to Databento. And so the type of people that are starting to solve some of these problems are changing
Mhm.
in terms of what it takes to run an asset manager.
Exactly.
What do you see around that?
Yeah, I was gonna say, like, it's tough to, it's still actually very tough today, unfortunately, compared to even 10 years ago. And the reason why I say that is, first off, like every one of those has tried, at some point when you're trading and you're doing fairly well for yourself, right? At some point, a lot of people have thought about this, like, hey, what if I sell my strategy to, I don't know, like a Millennium, right? What if I joined one of those pods or had some LPs invest in us as we could start our own hedge fund, maybe, right? And start doing it that way instead. And it's very rare for that to still happen today, for better or worse. And the biggest reason is just scalability, right? If you have a strategy that yes, you can trade a couple $1,000s very successfully and have very great returns. You could even trade a couple million and be very successful. But that's not a hedge fund. Like the hedge funds, a small hedge fund is, I can't remember the official, like, if you look at like Preqin and some of those data companies that define what a small hedge fund is, I think it was like 500 million was like a small, so it's like the scale of what small is in the hedge fund space is totally not the same as what a retail. So again, that's what I mean by the gap between retail and institutional is still increasingly growing. The so-called small hedge funds we see these days, and they're managing hundreds of millions of dollars. And it's like, it's almost like if I'm trading like $1,000 a day and I'm trying to sell my strategy, it's like my analogy is like, it's a bunch of people trying to sell your lemonade stand to like Minute Maid is that, it's like is or Millennium Management, Minute Maid, they're not gonna wanna, buy your lemonade stand, just because 'cause you're doing really well, because a big part of it is can you actually scale that strategy to trade billions, one day? And that is, the likely answer is probably no, unless you've actually experienced that. And so that's what makes it really difficult is, again, the people who enter at an institutional level, right, and have that experience and have had that training and have had touched millions of dollars or billions of dollars, like, for better or worse, like at least they know, what to expect, right? Versus if you've started as a retail trader. But then again, like it is easier in some ways, right? Like access to good data is a lot easier, for example. Access to good services, for the most part, it's a lot easier to access those services today than it was 10 years ago. So those are all good things. But at the same time, because the access is so much easier, it's gotten more competitive as well. So I think those are things I would just consider. Again, I'm not saying it's impossible. Look, we did it we should have failed. We should not have even gotten to launch for my first hedge fund. Right. And so definitely there are anomalies that exist out there. There's weird kind of people like us that exist. But that being said, is statistically, it's just saying that the numbers haven't necessarily like increased much over the years. But it's still possible. You just have to be the anomaly.
Totally. But I do think there is just a lot of disruption and like micro trends that do happen within the alternative asset management space. I think one, it's getting interesting, like the emergence of ETFs and like more managed ETFs that have like more interesting products that are wrapped within them. So there's all like the leveraged securities. You can start trading spreads. One of my good buddies, David, just launched BTGD, like 100% Bitcoin and gold ETF that you can get like leverage exposure to both. There's also like another good friend, Steven, founded Dub a couple years ago. It's a broker dealer, licensed, copy trading platform. So like anybody can go and create a portfolio. They build up a bit of a brand and marketing, and then you can go and deploy capital without Dub and then copy it. It's like to some extent like trying to disrupt a little bit of the asset management space, where like you don't have to give your money to an allocator. You could just give your money to a manager. It's not really managing on your behalf. But that's like some interesting disruption happening there. I see another thing that we run Hedgineer. We deploy software into our clients' environments. It solves all of their data, UI, risk, and portfolio analytics needs. And so we manage all that software and systems within their infrastructure the same way as I would manage a similar type of platform at my previous employer. And so what we see is a lot of interesting new managers launching. And a common trend is the concept of an external exclusive, where a manager might go from one pod to go launching their own, but actually that own fund is exclusively seeded from another manager. Which is really interesting because if you're really successful at one pod shop, you're not necessarily gonna get like that excited to move to all of your infrastructure, all of your process, all of your team to just another pod shop when your slope is probably about the same. But if instead you say, oh, well, what if you just move your team to another manager within these multi-strat concepts, but we're going to give you a pathway to have your own fund. We'll seed you exclusively through us, and we still get exposure to your returns and alpha. And then you can go and like eventually turn that into a commingled product, raising your own. And it's a really interesting trend that actually I see it happening a lot going into next year. And it's a way for a lot of funds to be able to recruit new talents that they otherwise couldn't get, because it would be just a lateral move of being a manager of one fund to another in a pod model.
Absolutely. That's a really great you're right. That is a new trend that's been happening. Is it back when we were starting, like there were no hedge fund, almost like accelerator type of programs, right? Like things that were targeting, there were no services that targeted early stage funds, for better or worse. Whereas now it's like there's a lot of, LPs out there, potential seeders. There's a lot more structures that people are exploring that are different from what it used to be. And so you're absolutely right. I think those are some really awesome areas that are forming. For me, I've yet to see like a seeded hedge fund like that from one of those kinds of accelerator programs. Truly, I don't know what, depends on your definition of success, I guess, but, become a household name, I guess. I think it's still early. Maybe it takes many, many years, right? Many, many years for even a company like Citadel to, Bridgewater, et cetera, right, to establish themselves. I think it's just, we're a little bit early still now, but definitely excited to see what's to come over the years. And hopeful about all these innovations.
Totally. And with that, Christina, I just want to say thank you so much. It's been a pleasure to have you on the show. We should definitely do this again sometime, especially when you're in New York, so we can do it in person. But with that, thank you so much.
Thank you.
And for everyone tuning in, thank you again for joining the Hedgineer Podcast. Again, I'm your host, Michael Watson. We try to release about every other week if we can. You can follow us on Apple, Spotify. We also throw these out to YouTube and most of the socials that you're used to. So till the next episode, take it easy.
Thank you for joining. See you soon.
Hedgineer.